Welcome back. The Canadian press is reporting Canadian Tire's making a bid for the right to some of Hudson Bay's intellectual property. Our next guest says Canadian Tire should proceed cautiously, not make the same mistakes that Target made years ago. We're joined now by Merril Mascarenhas, managing partner at the Arcus Group. Thanks for joining us today.
You're welcome. Thank you for having me.
What kind of intellectual property from the Bay could Canadian Tire benefit from?
I think their brands could be of value to Canadian Tire, but there's an important consideration with regard to brand IP, which is HBC and Canadian Tire are distinct brands, and they need to tread carefully when they align these brands in the market if they do proceed with the acquisition. What
do you mean they need to align the brands? Could you explain that a little bit more?
So Canadian Tire is more of a mainstream brand. HBC has moved a bit upscale. They have a different product portfolio. So when these brands, when HBC is acquired and its sub-brands are acquired, they need to be in a separate vector of growth, and they need to be compartmentalized in such a way that there isn't, it doesn't conflict with the Canadian Tire brand identity.
Okay, so let's talk about the warning that you are issuing with regards to Target and the way it went about its business. What are the similarities you see? What's the warning you're issuing here?
So there are three considerations. Target entered Canada in 2011 with an investment of $1.8 billion and left in 2015 with a loss of $5.4 billion. What drove that loss? It was really supply chain complexity and scaling up rapidly. I think there are three drivers here. If I was talking to Greg Hicks, I would mention three things. First is the department store market is not the fastest growing market in Canada. It actually declined by 3.4% year over year in Q1 2025. The second consideration is looking closely at Amazon and Walmart and their strategies, which rests on three significant pillars: customer insight, a good understanding of their customer base, operational agility, making sure supply chains work well, and ensuring that there's technology integration. Those three variables are very important. Another consideration is Canadian Tire's $2 billion True North initiative. They're investing about $1.4 billion or more in integration of their physical and digital assets. With those activities going on right now, they need to tread with caution, because adding HBC to the mix in a period of enormous change or significant change that will occur with True North over the next 4 years, if there isn't good alignment with the integration of HBC into Canadian Tire's operations, it may add just more complexity and could result in some of the challenges that Target faced.
Merril, do you see Canadian Tire taking over any of the actual footprint, the leases from Hudson's Bay?
Less likely. I think their model has been effective so far with the franchise model and their physical assets. I think their interest is more likely to be in their databases, HBC's customer databases, and their brand IP, which could be of value to Canadian Tire if they're looking at new vectors of growth. And Canadian Tire is looking at significant growth over the next 4 years. So this could be part of their top line growth strategy with the acquisition right now.
Given the state of the economy, the weakening of GDP, people worried about, lowered growth, not having jobs perhaps later in the year. Is that something they need to consider as well as a company that is trying to grow?
I would think there would be 4 variables they need to consider. The first is limit and scope. If they're looking at acquisitions, they should focus on their brand trademarks, digital customer bases, and their loyalty frameworks. The second, I'd say, is scale up gradually. Do not repeat the mistakes that Target made in terms of their acquisition and scaling up their businesses. The third would be supply chain agility. Ensure that if there's any integration that takes place, it happens seamlessly. And fourth, we've already talked about that, which is brand integrity. Ensure that you integrate these brands carefully. Canadian Tire is planning to launch 15,000 new brands in 2025 as part of the True North strategy. So I can only imagine the complexity of some of that work that's going on in the background, in addition to the HPC acquisition. And the economy is slowing down. So those are some of the challenges on the horizon too.
Okay, Merril, I do have to leave the conversation with their amount of time, sir, but thanks for your time. Merril Mascarenhas, Managing Partner at the Arcus Group.